Hi, this is Jeffrey Kerr Financial Group. Today is Friday, February 13, 2026. Friday the 13th. But the good news is it's followed by Valentine's Day, so I hope everyone enjoys Valentine's Day. Let me start by thanking everybody for the well wishes and the emails I received on the email that we sent out yesterday concerning my being part of the group that rang the NASDAQ closing bell on January 20th. Thank you so much for sending me back some congratulations and like that. It was a lot of fun, very cold day, and the markets were down real good that day because of the tariffs threat to Europe, but we did recover, and it was a lot of fun. I was honored to be part of the group that did that. So on to the markets, what's going on currently. And we've had some really good news. We've had good employment data on Wednesday, and we had good inflation data today. The jobs growth that was reported for January was much higher than forecast, and the inflation, as measured by the CPI, is the lowest in like 5 years. And so what's the market reaction? It's kind of, maybe we don't, it's not enough. Markets were down yesterday. They traded higher early, sold off. So I was looking around to see, okay, what's the news? What happened? Was a headline? What's going on? And I ended up at an article in Barron's that basically said we can't find the reason for the sell-off. And I think that this points towards, again, as I've been saying, algorithms, dealer flows, and passive selling and forced selling and like that. So that may have been what's going on. And we are at a level that seems like whatever direction we go, that the followers, it's going to force it that way further. So if we go up, it could go up higher. Low, go down, we could go much lower. And I think, again, it's a function of algorithms and dealer flows and derivatives more so than the economic news. And I also want to point out is that the different sectors and the divergences. Now, the software area was the ETF for the software companies is down about 23% year to date. And the energy ETF, the XLE, is up over 20%. At the same time, the S&P 500 is basically flat. The Dow's up 2.5%, but the NASDAQ is actually down about 2.8%, on the year. So the tech stocks are beginning hit, and this AI scare, and I guess it's related to, that AI will replace the need for people at corporate enterprises that will then that represent a seat or a license to the Microsofts and the Oracles, the Planeteers, and the various big software companies. So they may have less licenses out there, and that may be what's going on with the software stocks. But again, the tech stocks have been weak. We may, I think, kind of trade lower here. I still think the economy is good, and the earnings have been pretty good, and I think we're going to be a decent year, first half of the year economically, but the stock market may be a little overpriced and may need a pause or correction. We'll leave it there. Have a good weekend. We are off on Monday for Martin Luther King Day, no markets. I'll be back on Tuesday, and we'll do a video then. Thank you for listening. Please like, subscribe, share, and send us along any thoughts. Thank you again. Goodbye.